Hello, today we're going to talk about prepaid expenses. So question is, what are prepaid expenses? Prepaid expenses are expenditures paid in one accounting period but will not be recognized until a later accounting period. So let us take an example that in the month of January, accounts payable got an expense related invoice which actually relates to March. Then the question is, how should this be treated? Should it be recorded as an expense in January? No, because it belongs to March. So in that case, what should be done? Accounts payable, there are two things you can do. One thing is that accounts payable should should record it as prepaid expense. So the entry would be prepaid expense debit, accounts payable credit. And in the month of March, an entry should be recorded debiting that expenditure and crediting prepaid expense. But suppose accounts payable has already expensed it in the month of January. In that case, a correcting entry should be made, debiting prepaid expense and crediting that expenditure which was earlier debited. And then in the month of March, an entry should be recorded, debiting that expense and crediting prepaid expense. Now, prepaid expense is a balance sheet item. It sits on the balance sheet because as an asset, because it has a future economic benefit and expense in the time when the benefit is realized. If you remember the matching principle we had talked earlier, so basically that expenditure is pertaining to the subsequent period, so it should be taken as a prepaid expense for now and expense it in the month the benefit is received. So these are some of the items where prepaid expenditure would play some role. It is very common in this kind of expenses where it will be debited to prepaid expenses. And we'll talk about that in the subsequent slides. So first thing is the prepaid rent. So it is a common practice that suppose a business starts leasing an office space for the first time or renting a warehouse. And let's say in the month of December, company is signing a lease for a warehouse for 5 years, starting January. And the landlord says, well, you don't have much of a credit in the market or whatever reason. Landlord is asking for 6 months of prepaid rent. In that case, suppose let's say rent expense for the month is $10,000. So landlord is asking for 60,000 as a prepaid rent for first 6 months. In that case, how should that be treated? Now, in the month of December, should it be expensed as a rent in December? No, because benefit is going to start from January and not in December. So in month of December, it should record it as prepaid rent debit and cash credit, right? And then in the month of January, 1/6 of that rent, which would be 10,000 a month, should be expense for January, debiting rent expense debit and prepaid expense credit. Same way in February, again rent expense debit, prepaid expense credit, and so forth. So in 6 months by June, that prepaid rent will be fully amortized. Now, security deposit, is it different than prepaid rent? Yes, because security deposit is more of a security to the owner. You can say landlord in this case, that basically it is security against due performance of the contractual obligations. So it gives some kind of a comfort to the landlord that, hey, this money he's holding is, towards some kind of understanding that the tenant would meet its obligation over the lease term. So security deposit has been held for a long period of time. Basically, it is held till the end of the lease term. So if lease is for 5 years, and if the lease is not renewed, then landlord will normally refund that security deposit, subject to any kind of excessive repairs or any major alterations been done to the premises. Then landlord will use that security deposit to fix those repairs, excessive repairs or excessive alterations made to the premises, and partial or maybe full deposit, state security deposit, landlord may use it to offset those expenses. While prepaid rent is, as we talked about this, it's for a period expense over to be amortized over where it belongs. Now, in case of prepaid insurance, it is a very common practice that when the insurance company gives a quote, let us say the quote is for $100,000, then insurance company will ask for 30% down payment and the rest of the 70% in 9 monthly installments. So in that case, how should it be treated? So first thing is that when 30% down is been paid, that should be debited to prepaid expense account or prepaid insurance account. And then every month, 1/12 of that premium, say 100,000 is the premium, so $8,333 should be expensed every month, right? So that it is fully amortized over that 12-month period. Now, in case of workers' compensation insurance, it is a little different than other insurances in the sense that there are two components to that premium policy. One thing is the period, of course, the policy period, and the second thing is the payroll. So when the quotation for insurance premium for workers' compensation is asked for, normally insurance company would ask for the payroll estimation, and that too by category, that how much will be the payroll for the officer of the company, how much would be for the clerical staff, for salespeople, for workers, etc. And based on whatever that estimation is given, premium will be quoted and charged. Now, what happens is that suppose a $3 million estimation is given that for the next year, for this next policy period, total payroll will be say $3 million. And you amortize it, whatever premium is given, you amortize over 12 months. But then what if that payroll has gone up from 3 million to, let's say, from $3.2 million? Then the question is, what happens to that additional $200,000 payroll? What about a premium on those 200,000? So the ideal thing is that every month, rather than 1/12 of the expense, you analyze the payroll by category for that month and expense that in that month. So there could be a possibility that on 11th month or 12th month, on the 12th month, prepaid expense might have already been exhausted. So then you may have to start accruing that premium for their workers' compensation insurance, so that when you get a notice at the policy period, at the end of the policy period, that you don't have any kind of a surprise. Otherwise, what would happen is that at the end of the policy period, insurance company would send someone for auditing your payroll, and so they will look into your payroll and then your state filings, etc., and then determine what the total actual liability is going to be. Then less what the premium you have already paid, and the balance they will serve you a notice to pay the difference. Question is, if the policy period already has expired and you already have closed your books, so now you have a surprise in the subsequent months, for the period which was for the prior kind of periods. So nobody likes surprises in accounting, right? So one need to account for this correctly. Now, in case of taxes, a lot of city government, state government run July to June as the calendar year. So one need to, when the notices come, whatever the unsecured property tax, etc., those notices come, one need to take it as a prepaid expense and amortize every month, 12th of that. So normally businesses have December year end, then they'll have a prepaid expense for subsequent year for like another 6 months. So they need to amortize that every month so that it has been accounted properly. In case of subscription, website maintenance like GoDaddy.com or some kind of other website maintenance companies, software companies, they charge you a subscription for a certain period of time. And then so you need to amortize that. So take it as a prepaid expense and amortize it in every month the subscription relates to. Same way too would be for professional fees. If it's something has been paid in advance, then you got to expense those in the period the service has been provided. Now, also in case of trade shows, it is very common that you got to pay all the trade show expense related expenses, like renting the space in the trade show and all those kind of equipment, etc. you rent for the trade show. That is normally prepaid. That's been paid in advance because at last minute you may not even be able to get into the trade show. So you need to prepay all those. So you need to take it as a prepaid expense and expense it in the month the trade show has been held. Same way, any kind of a travel expense, hotel stay, or car rentals, etc., it should be expense, in the month when the travel takes place. So that is also very common item, which will have a prepaid expense. Normally, you book it to prepaid expense and expense it in the month it belongs. This is a simple one sample worksheet for you. Just you can kind of just make you understand this. Is that here in September, Hartford Insurance general liability was paid for October to October is the period. Total premium was 62,300. So monthly premium would be 5,191 has been expensed in January. This has been expensed in February and so forth. So that by October, it will be coming to a zero. Here in the month of December, Toll Brothers rent was paid for 6 months in advance, right? We talked about that. So that 60,000 which was paid has been amortized 10,000 every month, right? And then here is a LinkedIn account for 5 months. 5,000 was paid in January, which is amortized $1,000 a month. So in the month of February, normally entry would be that general liability insurance expense. This is the expense code 64300, 5,191.67 debit. Rent expense 64,900 is the expense code, $10,000. And then recruitment fees 63,300 is the code, $1,000. And then credit prepaid expense 16,191.67. That will be an entry for the month and so forth. You can reach out to me at sharpiemba@gmail.com. Thank you for your time.